Note that if you're using an external depreciation platform, i.e. another system to calculate your depreciation, and you've got this button ticked, you won't see your depreciation tools or your depreciation reports. Next thing to note is that it's important to get your date right, your start date right. This is relevant particularly if you're bringing over assets from another depreciation tool. So let's just say that you've got a depreciation report from another system that calculated to 30 June 2020. Then what you would do is you would set 1 July 2020 as the start date so that you could start adding your assets after you add the group with the start date of 1 July 2020. Depreciation is contextual with the type of entity you're dealing with, and the depreciation calculated values will flow into the tax returns. So it's just worth noting that when you set up your groups, your asset groups, that you note that the categories are contextual. So I'll just show you what I mean. So these are your company categories. And compare those with what you see here with an individual, where you'll notice that there's a whole lot more categories, because with an individual, the calculated depreciation won't just flow into the business section, it could also be relevant to other sections associated with the individual, such as work-related depreciation. So let's flick back to that company, and we'll consider adding in a depreciation group. So we're adding in a depreciation group because you have to put your assets into a group, and this will be in respect of a business, and it'll be in respect of a non-primary production business. And you can see here the group will have a relationship with one of these fixed asset categories. So how do these fixed asset categories, how do they link in with the system and the way that the Logit system works? Is let's flick over to the accounts. So we're back at the client, and you can have a look down here in assets. And if I was to look in the categories of fixed assets, the groups tie in with these categories, right? So if you look down here, we would be down here. You've got motor vehicles, you've got long life pool, low value pool. These are all depreciation groups associated with tax classifications, because Logit is built from a tax classification perspective. So if we jump back, you'll notice that those are the types, the fixed asset types that we can associate with. You'll notice the link there between the fixed asset types and what I just showed you here, which is the different, I guess, classifications or categories for those assets. Right, so let's have a look, and we'll use plant and equipment as our starting point. So if we're to look down here, fixed assets, plant and equipment at cost with the less accumulated depreciation, that's the relationship. We come back over here, so we'll create plant and equipment group. Now what I'm doing is adding an asset which was here before the date that we've set as our start date. So we said we're starting this on the 1st of July 2020, this system, but we do have an asset that existed before this date. So let's go back and put that asset into the plant and equipment group. So we've got a crushing machine purchased back on the 1st of the 4th for $50,000. Diminishing value was used in the old system. Don't forget this is an asset that we're adding, that we're bringing forward. Now typically you would find the accumulated depreciation on the old depreciation reports, but in this case I'm just going to use the calculate button to calculate that value. Okay, so the effective life, okay, so I need to put in some more details here, and maybe it's either life or rate. So maybe that was 8 years, which is 25%. Now I can calculate. So that would be the accumulated depreciation. So the opening written down value would be the 50,000 minus the 23,652 would be the opening value. So let's save that asset in. And now if we want to have a look at what that report would look like, don't forget again, depreciation start date 1 July 2020. So what we want to look at to see what that asset looks like in the depreciation report is to set the date to 30 June 2021, i.e. 1 whole year. You can see we've got the opening assessable or opening written down value, which is calculated by the 50,000 costs minus the accumulated to that date. Typically you should have this value from your old software or the report generated by your old software, but at least here you have your depreciation for the new system calculated by the Logit system, right? Now let's add an asset bought in the current year. So we need to go back into plant and equipment. We need to add our asset inside this group. So diesel generator bought during the financial year within sort of a month or within sort of 2 months. And we need to obviously put in an effective life for this or a rate. It's not disposed of. And if we have a look at what that will look like, there we go. Now let's have a look at what that will look like in the tax form. So we've got a 2020 tax form in here. It doesn't look like it. I'll add in a tax form. You'll notice it activates the depreciation section of this tax form. And if we looked in the depreciation section now, we've got our plant and equipment depreciation calculated by the system. And if we looked in the reconciliation section, you can see here that we've got the calculated value, the tax value. Now don't forget, as I said, Logit is calculating the depreciation from a tax perspective. Now typically in 2021, 2022, it's more likely for a small business entity you'd be using an immediate write-off, or maybe clearing out your general pool. But in this case, I'm just demonstrating how to use the depreciation module generally, and therefore in this case, I'm not using the calculations from a small business entity perspective. I'm using them generally. So not in this case, not from a small business entity perspective, which in that case you wouldn't be using depreciation. You wouldn't be using plant and equipment. You would have moved these assets into the general pool probably and written them off immediately. I want to now show you what this system would do if we created a tax form for 2022. And again, we should get that same effect where the assets are activating the depreciation module, and again depreciation is calculating. So 14,866 14,866. Now let's sell out the crushing machine. So we're in the 2020 22-year tax return. So let's say we sold it right near the end of the year. Right near the end of the year, and we'll say that we sold it for $5,000. Now in this case, that's 2020, right? But if we want to look in 2022, we have a loss of $10,213. We've still got the same depreciation calculated. So 10,213 as a loss. And there's our loss on sale. Now let's take a look at what this other asset is left here. And we've got closing written down value on the remaining diesel generator of nearly 15,000. So we'll say that we also sell this right near the end of the year. We've got a diesel generator, and we'll say that we sell this for 20,000 also on the 1st of the 6th, 2022. Let's go and have a look at our, well, probably if I show you here, you should see that we'll have a profit. So profit 4322 on that one. So there's our profit on that asset.